Hey, this is Matt from InvestiQuant. Today is Tuesday, June 8, 2021. We've seen some volatility today. If you look at this chart in the upper left-hand corner, you can see this is the S&P, and we gapped up this morning above the prior session high of day. We sold off initially, and then a little bit closer to the 11 to 12 o'clock time slot, we had a breakdown that broke down below the prior session low of day, and we have since recovered. Now, we've got some different patterns taking place in the different markets, but that was the most interesting to me because that creates the outside day pattern, and that's not taking place everywhere else, but it is taking place here in the S&P, and that's one that we're going to be looking at this afternoon. So let me go ahead and set it up in Discover. We'll look at an outside day that is trading in the top half of its intraday range. So I'm going to use a 3 p.m. entry time here, set up as a long, and then I'm going to go into the opening filters, say that we gapped up on the session, and then I'm going to build this outside day pattern here in the post-open filters. So the first thing I'm going to do is I'm going to say that the high is above the prior day high. I'm going to grab that from this category right here, intraday high versus daily levels. I'm going to hit equals next to above prior high. Then I'm going to go to the next category over, intraday low versus daily levels, and I'm going to say that it is less than the prior low. So that creates the outside day pattern. And then lastly, I'm going to say that at 3 p.m., which is the time of the entry, it's trading in the top half of the intraday range. It's currently doing that now. The midpoint in the S&P is right around 4220 at the time of this recording. So that could change, but as long as we would be trading above that, that would be the important aspect for this study to still be in play at 3 p.m. Eastern time. All right, next I'm going to head into the indicators section, put us in a bull market environment. We're above 10, above a 200-day simple moving average, and now I can hit view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at the close, which is 4:15 p.m. Eastern time, when you gap up, and then as of 3 o'clock, you have an outside day that has formed, and you're trading above the midpoint of the session. So you have recovered some of those losses. This is taking place above a 10 and above a 200-day simple moving average. The S&P has 32 samples historically dating back to 2003. The NASDAQ has 40. The Dow has 26, and the Russell has 25. And if we look at the win rates on them, as a group, they are all weak. The S&P is coming in at 38% of these have closed above that 3 p.m. price. With the NASDAQ, that goes to 43, the Dow 35, and the Russell 32. So weak win rates across all four of them there. If we look at average wins and average losses, the average win is larger than the average loss for the S&P. That is not the case for the other instruments. So the other instruments all have larger average losses compared to their average wins. So historically speaking, the win rates on this pattern have favored the downside, so more often than not, this has closed below that 3 p.m. price when the pattern is in play. And as I mentioned earlier, this pattern is currently only in play for the S&P as of the time of this recording, and that may change. We may not be trading above the midpoint at 3 o'clock, but currently it is true, and historically it's been a little bit weak. So hopefully you found that helpful. Good luck today, and we will see you next time.